Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, May 18th. We've got an action-packed week ahead of us, a couple things to put on your radar. Google is hosting its annual I/O Developer Conference. Meta is scheduled to begin a big round of layoffs that will account for about 10% of its total headcount. And NVIDIA is reporting its first quarter results on Wednesday after the closing bell. It's also a big week for Elon Musk with the expected launch of SpaceX's Starship scheduled now for Wednesday. If that goes well, it would mean big things for the upcoming SpaceX IPO. Of course, the launch has been delayed at least 3 times in 2026 alone, so we will see if things take off or not. On the show today, the Information published exclusive reporting about Microsoft executives sounding the alarm over GitHub. We'll talk about the outages that it's been experiencing shortly. We also have exclusive reporting around BlackRock's potential interest in the SpaceX IPO. I'll then talk to the co-founder of AI platform Genspark. We'll talk about pricing, competition, models, and of course, ROI. And lastly, we will wrap the show with some exclusive data from our generative AI database on how concentrated revenue is in the sector. It's going to be a fun show, so let's get right on into it. GitHub is causing Microsoft more and more problems. Activity on the platform is surging, but so too are issues and outages. I want to bring on Aaron Holmes, our Microsoft reporter, who published an exclusive story with those details today. Aaron, welcome back to the show. It's great to have you here. We had you on the show a couple weeks ago. You mentioned that GitHub had some problems with outages. You published a deeper dive on the platform today. What's changed since we last spoke to you?
Yeah, so essentially, I have learned that these outages that GitHub has been suffering are basically resonating with some of its biggest customers, and heard that some of those customers have actually been complaining to Microsoft and getting essentially refunds on, some of the time that there were outages. And, that's starting to obviously impact some of the bottom line at GitHub. And on top of that, I think, I also just kind of learned more broadly that the executives who lead GitHub are trying to really push to fend off the rising competition that GitHub Copilot is seeing from Claude Code and from Cursor. And that at this point looks like, an all-out effort to improve Microsoft's own AI coding models so that GitHub Copilot has more of a moat compared to competitors like OpenAI and Anthropic.
So we'll get into all those parts of the story shortly. I want to go back to the fundamental cause of the outages. Do we know why these outages are occurring?
There's a lot of different factors that seem to be kind of creating this unique situation. So the company itself has pointed to rising traffic on GitHub, which is, being driven by people using AI coding agents who can effectively upload and edit code on GitHub much more rapidly and more frequently than a human ever could. Not all of that increase in traffic is leading to new revenue, though, because GitHub does not charge for basic things like, uploading code or editing code with your own third-party AI agent. At the same time, we also know that GitHub is moving from, Google Cloud to Azure, and that migration has caused some issues, according to the company. There's also just been a lot of churn at GitHub. A lot of the leaders that were previously leading it have moved to other parts of Microsoft or out of the company entirely. So I think that all of these things are kind of coming together to create a somewhat challenging situation for GitHub. But the company has said that they are making some fundamental changes to how they, develop and host the platform that in theory should help with the outages that they've been seeing.
So I didn't realize this, but GitHub, which is owned by Microsoft, they were actually using Google Cloud this whole time. They weren't using Azure.
Yeah, they've used a mix of different cloud providers. They were acquired by Microsoft in 2018 and originally wanted to get on Azure pretty quickly, but it ended up taking just a lot longer than the company had planned for. But this year, they are officially trying to make the Azure migration happen fully and once and for all.
Right. So one of the interesting parts about your story, Aaron, is you also talked about who's leading GitHub, or rather, there being sort of a bit of a not a void, but a question mark as to who is actually leading, who's in charge over there.
Yeah, so the most senior executive leading GitHub is Jay Parikh, who Microsoft hired from Meta a couple years ago, and specifically has been leading all of the kind of internal businesses that basically sell developer tools. So GitHub kind of became a natural fit for Parikh to take over. However, last fall, former GitHub CEO Thomas Domke left Microsoft, and since then there hasn't been a dedicated CEO just on GitHub. There's also been some other big departures. Asha Sharma was leading product at GitHub or within the core AI org that includes GitHub, and then left to become the Xbox CEO earlier this year. Julia Lucin, who was leading the developer division at Microsoft, also had some oversight of engineering at GitHub, and she just announced her retirement. So it is definitely a period of transition where a lot of the most senior folks who had been leading GitHub have moved into new roles.
So then I just want to understand then what Microsoft is doing then to address these outages, because they have a lot more traffic. And again, we should remind folks here, GitHub is in the business of basically people who develop code. They upload their code, and it's a place that they can sort of share access to these code repositories, I think it's called. And so we are in an environment where it's a lot easier to generate code. There's a lot more code being uploaded, more traffic, more outages, lack of leadership. What is GitHub ultimately doing to solve the problem, or what do they tell you they're doing?
Yeah, and it's not even just the outages. We also know that GitHub's margins have come under pressure recently, in part because they were serving GitHub Copilot on a per seat pricing model, and the fact that more people were using the AI tools without necessarily paying more to use them compressed margins last quarter. So not only are they trying to sort of stop the outages that have annoyed customers, they also recently overhauled pricing to essentially raise prices for most of the AI features on GitHub. And as I reported in the story leaders have also been looking into potential new ways to scale how much they charge customers with how much third-party AI agents use the platform. Obviously, they don't want to do that in a way that would further alienate any customers, and it's not clear exactly what course they're going to take there. But it has become pretty urgent to overhaul pricing to make sure that they're not subsidizing the use of these costly AI tools on their platform.
So when you talk to GitHub customers then, or people using the platform, how high are the stakes here? Because another layer of your story is you talk about the competition that is mounting against GitHub. You've been on the show previously talking about how OpenAI was thinking about developing their own rival to GitHub. In your story, you talk about the threats that even some of the larger AI labs could pose to GitHub. Is this a type of platform where customers are saying, "Hey, I'm just gonna switch. It's very easy for me to go," or is this kind of a harder migration that might be a bit slower?
I think we've seen some smaller customers that told me that they were considering switching. We also saw Mitchell Hashimoto, the co-founder of HashiCorp, say that he was moving his open source project Ghosty off of GitHub. However, when I talk to larger customers, they do say it would actually be very costly and kind of annoying to move their code bases that they keep in GitHub into a competitor like GitLab. It's pretty straightforward for a large company to also host its own code repository. That's what companies like Meta, for example, have done for years. And I think that option is there, but currently doing that would be a bit of a pain for large customers. So I haven't heard of any large enterprises that are actively moving out of GitHub. And I think that to some degree, the switching costs involved with moving away are keeping GitHub from bleeding customers for now. So I think that if GitHub is able to sort of staunch the flow of people being annoyed by recent outages, they are likely going to be able to hang on to those big customers. However the more that developers use tools like Cursor or Claude Code on an individual basis, means they might not be necessarily storing that code in GitHub versus just storing it locally or elsewhere. And that's another kind of real concern that GitHub is facing now.
Great. Well, Aaron, I want to thank you for coming on. That is Aaron Holmes, our Microsoft reporter here at The Information. BlackRock is considering a major investment in SpaceX's IPO. That is according to exclusive reporting from Cory Weinberg, our Deputy Bureau Chief of Finance. I want to bring on Cory to share with us what he knows. Cory, welcome back to the show. Another big week in SpaceX IPO land. Whenever the S1 drops, we are eagerly waiting. What did you find out about BlackRock?
BlackRock is obviously a classic, huge asset manager that invests in a ton of IPOs, and they've been pretty hot on the SpaceX train. I've been trying to talk to my sources to understand, who are the big buyers of this deal. SpaceX needs $75 billion, or that's what it's been sort of talking about raising. Um, that's the biggest IPO in history by sort of at least a factor of two. And from people who've been around IPOs for a while, billion-dollar plus investments in a deal like this are rare. You can count them on two hands once over. And so what been hearing from sources is BlackRock has at least been discussing investing as much as $10 billion in this IPO if they can get their hands on it. 5 to 10 billion is the range that I reported. That could change as we get closer to deal time, depending on the price. But the upshot is BlackRock is all in.
And why are they all in? What's the calculus here?
The calculus, at least from if you listen to the CEO of BlackRock's public comments on Elon Musk, the calculus is Elon has delivered returns time and time again with Tesla and now coming with SpaceX coming to the public market. And that, sort of tells the whole story for them. Larry Fink brought Elon Musk onto the main stage at Davos earlier this year. And he started his conversation with Musk by telling, this sort of financial elite audience, look at the compounded returns that this man has brought to bear. Imagine if all the pension funds sort of had invested alongside Tesla when it went public, just how good their returns would be. So you have the CEO of BlackRock almost talking up Musk as he's planning this huge financial event.
So if BlackRock puts 5 billion, 10 billion, I mean, they put money in, would there be ripple effects? I mean, would this send a broader message then to investors given BlackRock's stature? Or is this really just, is this a top down, is this a deal between the CEO of BlackRock and Elon Musk? How high are the stakes here for this investment?
I think sources on the buy side, sort of in the investment world that I talk to, are trying to discern who are the big incremental buyers of this IPO. And knowing that sort of BlackRock is in for a big sum does send a strong demand signal to the rest of the market, especially because some bearish commentary that I've heard from sources is sort of this idea of, well, so many of these large mutual fund complexes already own SpaceX in some form from the private markets. Fidelity Investments, one of the largest mutual funds that you would expect to invest in an IPO, for instance, already has a humongous SpaceX stake. And
Right. You talked about some in the story. It was like this idea that BlackRock is almost playing catch up here.
Yeah, BlackRock is playing catch up in the SpaceX game. They have invested, privately for I think the last 8 years or so, but their stake they haven't invested nearly as much as Fidelity for sure, and then also not as much as some other large public crossover investors like Bailey Gifford and Franklin Templeton.
Hmm. Cory, I just want to give people a little bit of of a primer here on whenever the S1 does flip and people are gonna rush to it, and these documents are sort of quite meaty to get through. What is the first page, as you're flipping through? I mean, where are you gonna go first in the S1? What's the most interesting part that you're gonna be looking for?
Uh, I think there's a few different places. One is I think people should actually read the kind of management discussion section that are in these S1s. This is an area of every IPO document where companies get to explain sort of their vision for the business, and that's useful framing. So I wouldn't, it's sort of this long. There's long section. There's paragraphs. Many paragraphs, and it can look quite dense, but it's worth reading. The juiciest parts, I think, will be sections like related party transactions. which sort of are supposed to show where have there been significant deals between Musk's companies, between insiders and SpaceX. Those are usually some areas where investors will find red flags in terms of sort of intermingling of deals. And then you also have, I think people are going to fixate on the sort of executive compensation section, especially because it's Musk, because as we've reported, he has a couple huge moonshot grants that give him a lot more equity if he brings SpaceX to Mars and if he launches an insane amount of compute into space. So I think those are kind of going to be a couple juicy sections. But overall, I find people don't read these documents enough in full, and set aside an hour and just
An hour?
get
You
yourself
get
a
through
cup
it
of
in an
coffee
hour?
or a
Really?
glass of wine.
Well, if you're getting through a whole S1 in an hour, I mean, there's a lot. The SpaceX IPO might take me a little longer than that, but
First read, I think you do a first read in an hour, and then come back to it.
great. Okay, Cory. Well, I want to thank you for coming on. That is Cory Weinberg, our Deputy Bureau Chief of Finance here at The Information. If you live in New York City, chances are you may have seen subway ads for Genspark. It is one of the loudest campaigns on the trains. Saw one this morning, actually. I want to bring on the co-founder and COO of Genspark, Wen Sang, to share more about his company strategy. Wen, welcome to the show. It's great to have you here.
Good morning, Akash, and excited to be here.
So I've seen the subway ads. Okay, I see it's got there's the mock diagram of the train, and it's emulating the path that you go from a single idea to generate a PowerPoint deck. Is that what Genspark is all about? Generating AI PowerPoint decks?
Well, it is what we're about, but it goes way beyond that, Akash. So essentially, what Genspark is, we build AI agents for the 1 billion plus knowledge workers. So the world is going through fundamental shifts right now. In the past, we human beings, we are the workforce. We are the production engine. For us to achieve real business goals, we have to go through the busy work, all the grunt work. You craft documents word by word. You build presentations pixel by pixel. You build financial models cell by cell. Well, with Genspark, you no longer have to do that. Everybody gets elevated to the level of a Jamie Dimon. You don't see Jamie typing hard to get presentations done, right? You just to have a fleet of analysts running your pockets, and they run around to get a busy work done. That's what Genspark is all about.
But Jamie Dimon has people. Jamie Dimon has people doing it for him, though.
Exactly.
He has
Yeah,
people doing it for him.
Yes, we put AI agents in your pocket to do those work for you.
Okay. All right. So it's the busy work. It's it's spreadsheets. It's documents. It's PowerPoint presentations. I see the whole suite. My question is I was just using Claude yesterday. I mean, you can install Claude into Excel, and I think Gemini now they have their own way of developing PowerPoint decks as well. So how is it that you are going to compete with the large AI labs, which very easily can develop their own applications the way you have?
True, Akash. Clearly, this is the direction everybody believes in, right? So goes with even big tech giants like Microsoft, Google, and so on. So we all see the value of asking the help from AI to get all the busy work done for us, so that we human beings can take a step back and then think and be strategic and creative. But when it comes to what is so special about Genspark is we released the world's first mixture of agents tech architecture. What that means is we sit on top of 70 plus state-of-the-art models. We work with OpenAI, Anthropic, Google, and all the open weight models. And we orchestrate we call on the perfect model for the right task at the right time in order to take advantage of the strength of all of these different models. Because as you know, all these models are good at different things. They have different strengths. And it is important to not get biased by one of them, but being able to summon all the models at once to get onto your tasks. So we understand the importance of allowing not only the individuals, but also our enterprise clients to have access to the greatest and latest models all at once, instead of them feeling that being locked into one model provider, and then when someone else
Right.
launches a new model, they just can't have access to it. Yeah, that is
Let, let,
extremely important.
let me ask you a question. You guys have put up some big numbers, and I should say we didn't mention it at the outset, but I mean the last valuation you guys got was 1.25 billion, I believe. This was in the fall of 2025. You're looking at me. Was that not the latest round?
The latest was actually 1.6 billion.
1.6 billion. Okay, my apologies. So 1.6 billion, and the latest revenue figure is what?
So we grew from zero to $250 million annual run rate within 12 months. That was toward the end of March, about
End of
1
March.
year in. Yeah.
So my question for you is, companies like you that grow their revenue profile so quickly, how confident are you that this is sustainable revenue? I mean, we hear about these experimental budgets, these trial periods. You get a lot of companies quickly, and then there's the churn risk. What are you doing to prevent that? Are you seeing any churn?
So just as any company, Akash, everybody has a certain amount of churn. So it's only natural that you get discovered early on, and then some people decided they wanted to keep using it. Some people decided this is not necessarily right for them. But for us, what is important we found is that the growth is like a wildfire. We're just getting started. We're all in the very early stage of this whole AI revolution. But what we found is output quality is essentially the most important thing. What I mean by that is, um, we human beings are actually pretty smart. It's pretty easy for us to tell, am I, wasting my time burning tokens, teaching AI and not getting what I want? Or it's one prompt, the job is done. So we built a technology. Not only it has access to 70 plus SOTA models, but we've also built out 150 plus in-house tools to ensure that the large language models, they would have the right tools to use in order to do the real world work, because LLMs are just like brains. They don't have arms and legs. We built arms and legs for them. With that, we have seen users loving our product and taking advantage of the product, making a lot more money than they paid to us. And
Right.
essentially, yeah, the output quality is the key. So
So in other words, the 250 million end of March in annual recurring revenue, that has continued to go up. You haven't seen that dip at all in any way.
I would say we're really just getting started. Think of it, because I mean, there are over 1 billion knowledge workers. That goes to solo entrepreneurs,
Right.
bankers, analysts, also, a lot of people working in the enterprise environment. And today, if you compare the impact of AI versus internet, it's way not there yet. It's
Yeah.
not touching. Yeah.
How
So
are you guys dealing with the issue of rising prices for the models? I mean, so 70 models, right?
yeah,
And
yeah,
yet, uh, it's expensive. It's getting more expensive. We've done reporting on this, and
yes.
you're an application layer company. You are sort of subject to the prices that the models will charge you. I imagine this is having an impact on your margins. I don't know if you're
Yes.
passing these costs on to your customers.
Yeah.
You're smiling. I feel like this must be a top of mind issue for you.
Well, yeah, look, I guess everybody's paying premium to the Frontier Labs. There's no question. And the Frontier Labs would pay premium to NVIDIA. That's just the state of the world. But the reality is this, Akash. Um, GPT 4.5 is a fine model. Okay. And it's supported, it powered ChatGPT for a long, long time. People loved it. But today, everybody's on 5.5. Why? And the cost of 4.5 has went down. It nosedived. But people are on complete new models. That is because all the AI application companies are trying to push the ceiling, the performance ceiling. It's not to say that model is no longer, no longer valid or whatnot. So basically, this is early land grab, like the early days of Uber and Lyft, and so it goes with 20 other companies, is the nature of it. People
Yeah.
are subsidizing inference. There's no question. We
L-
are
l-
paying premium to all of these frontier labs.
When
But yeah,
let me ask you one more question before you go,
yes, please.
because I did want to ask you this question here. Um, how do you measure the ROI of Subway ads? You guys are literally everywhere. I mean, like, do you are there metrics around how many people will see it and conversion or stuff like that? Is it just brand value? Like, I mean, I see your ads everywhere. How do you measure the ROI of these ads?
That's a great question, Cash. We have a full portfolio of advertisement strategy. So before we hit $100 million annual run rate, we didn't spend a single advertisement dollar. And then we believe it is product signal. So we bought Super Bowl ads actually back in February, halftime, fourth quarter. We had whole 60 seconds out of the Super Bowl, and then we decided that New York and Tokyo, these two cities, are the major hubs knowledge workers, and we wanted that people to know about us. We know we built something that is valuable, and a lot of people love us, and we want to make sure people can see us. So that's why we bought inventory from the New York subway system, because we know so many tens of millions of people.
What's the ROI though? What's the ROI?
So we measure the ROI a lot more easily with spending on Google and YouTube and so on. But for subway ads, to your point, it's brand awareness. It is when I get a phone call from a major investor who's willing to put in hundreds of $1,000,000 to a company like us, saying that, oh, I've seen your ads, that's why I'm calling you. Those are the moments that you know that, hey, this did the job for us. It's not like a dollar's a dollar.
Got it. Okay. Well, Wen, I want to thank you for coming on. It was a great discussion, and I look forward to seeing how things shape up for the company. That is Wen Sang, the co-founder and COO of Genspark, here on TITV. Anthropic and OpenAI are widening the revenue gap between themselves and the rest of the AI startup field. My colleagues Amir Afradi and Stephanie Palazzolo wrote about that in their Sunday Insights column that published over the weekend. Stephanie joins me now to explain with us the numbers that she crunched. Stephanie, welcome back to the show. Tell us about the data that you calculated and what it tells us about AI startup revenue overall.
Totally. So this has been a continuation of a series that we've been working on for the past, couple months or maybe at this point up to a year, where we're kind of tracking the revenue of these quote unquote AI native startups. So, I mean, two things here. I think first, on the bright side, we do see kind of overall revenue from these AI native startups growing. So it's up, 112% from 6 months ago, which is obviously pretty impressive. I think maybe on the not so bright side, depending if you're an investor who's invested in these big AI model labs or not, a pretty big percentage of that revenue is coming from just two companies, OpenAI and Anthropic. And that share of revenue that's coming from those two model labs has been growing over the past couple months. So right now it's at, around 89%, which is 4.5 percentage points higher than what we saw 6 months ago.
So 89%. By the way, before we do that, Stephanie, you are selling the Information's generative AI database very short here. We have been tracking AI startups revenue for not a year, not 2 years, but nearly 3 years now since the launch of the Information Pro. And I know this, of course, because I was responsible for tracking said revenue 2 years ago.
Sure, this is true.
So we've got a lot of data in that database that is definitely worth checking out. But I want to come back to the 89% figure. So it's Anthropic, OpenAI, and the rest of the sector. I mean, what does this tell us? Just that, I mean, these startups are never going to be able to compete. I mean, we've seen Anthropic and OpenAI. They unveil features that end up sort of encapsulating the entire product portfolios that these smaller startups have. What are sort of the broader signals that this is sending to you about the AI race?
Yeah, so as you said, it's definitely a piece of evidence that is supporting this argument that a lot of the value is going to accrue to the model labs. So, as you mentioned, in the past year or so, we've seen these model companies like OpenAI and Anthropic come out with lots of different applications that are targeting specific use cases or verticals, things like, coding, finance, law, that are, honestly kind of like overtaking their own customers that are working in this vertical. So we've obviously seen, for instance, Claude Code and Codex really catch on and really kind of pose a threat to companies like Cursor, which, at one point was the kind of darling of the AI app sector. And so I would say it's definitely not a great sign for AI applications. And I think it definitely should, raise questions in their mind of how they want, what is the best strategy for them to remain competitive against these larger AI model labs. And, whether they're targeting areas that the labs might want to go after at some point in the future.
Now, you also talked about a caveat to your analysis, which is that there's a little bit of double counting here with revenue. Can you explain to us what you meant by that?
Yeah, so kind of related to what I just said, uh, many of the companies in our analysis are the customers of these large model developers. And so as you see these AI apps as you see their revenues grow, they're also spending more money on the models to then power those apps. So it is kind of the situation where a lot of this money is kind of like flowing amongst the same couple of companies. And so there is this kind of, kind of double counting ish in a way with this analysis.
Right. Now, we are, of course, only talking about top line here. If you were to take this analysis a step further, I mean, profitability would obviously be the next question. What other sorts of data might you be looking to collect, or what are the common metrics that a lot of these AI companies are focused on right now?
Yeah, so I would say, revenue growth is the top priority for many of these companies. And we do see, we've written stories about this that a lot of developers these days are willing to shell out kind of bucks on these top models because they know that they're just that there really isn't like a good alternative to them, and to compete with other startups they just need to kind of bite the bullet, pay for the top models, and call it a day. But I do think like profitability is a metric that people are and investors are increasingly curious about, and are placing more importance on, especially as we see companies like OpenAI and Anthropic head towards the public markets, where traditionally public market investors are they want to see profitability at some point, if not right whenever these companies are going public. So yes, I think revenue growth, uh profitability. Another thing that people are looking out for is, in some cases, we see these app companies start to train their own cheaper models. So companies like Cursor are, basically taking open source models and specializing them for specific use cases like coding, which kind of then helps them save a lot of money that they might have otherwise spent on the big model labs. So, yeah, so I think definitely the next time we do this analysis, I'll be curious to try to check out those metrics, as well as whether we see the share going to OpenAI and Anthropic growing, or maybe we kind of see AI applications catching up.
Great. Well, Stephanie, I want to thank you for coming on. That is Stephanie Palazzolo, author of the AI Agenda newsletter here on TITV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media on X, Instagram, TikTok. I'm already excited for our next show tomorrow. Have a great rest of your Monday. Bye-bye for now.